Hi, and welcome back to Market Conversations. Today I'm going to do a quick video on Assertio Therapeutics, as well as showing you guys how to make $20 in less than a month on this stock. So if you guys are interested, go ahead and stick around. But before I continue, I just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. I also started a Patreon page where like-minded people can talk about stocks, cryptocurrency, options, and just learn from each other and grow as a community. I will also be sharing my trades on there as well. If you guys are interested, I will go ahead and post my link down below, and it's only 33 cents a day. Let's take a look at the stock. 1 week, it's down 15%. 1 month, it's up 77%. 3 months, it's up 165%. In 1 year, it's down 19%. Let's take a look at the volume. The volume is quite low compared to the average, which is 42.86 million. They do have earnings coming up on March 11th. It says they are a leading commercial pharmaceutical company bringing differentiated products to patients. They have a robust portfolio of branded prescription, neurology, inflammation, and pain medications. The company has grown through business development, including acquisitions, licensing, and mergers. They are looking to leverage their commercial excellence to be the partner of choice. And they just recently closed a registered direct offering of $34.3 million at a purchase price of 98 cents per share. And they are going to use the net proceeds from the offering for general corporate purposes, including general working capital. And then back on February 9th, they closed another direct offering. And this was at a price of 62 cents per share for gross proceeds of approximately $14 million. So they already done 2 offerings this month, which means they are using this money to try to expand their company. They announced restructuring plan and leadership changes. So they announced this on December 15th, and the CEO stated, "To adapt to the current market environment and maximize shareholder value, we are refocusing and substantially reducing our operating footprint, which is expected to result in a significant cost savings. Given recent changes in our product pair mix as well as the continued near-term impact from the COVID-19 pandemic, we believe that the restructuring the business will allow us to continue to provide our differentiated products to patients and better position Assertio for future success." The restructuring plan is expected to reduce Assertio's total annual cost by approximately $45 million after giving effect to one-time restructuring costs. These reductions are in addition to the previously announced $40 million in synergies associated with the Siler merger. The restructuring milestones are set to begin in December 2020, with a majority expected to be achieved by the end of the first quarter of 2021. Now, it's huge because that's coming up. So that's with a majority expected to be achieved by the end of the first quarter of 2021. The company expects to recognize approximately $8 to $10 million in severance and restructuring charges in the fourth quarter of 2020 and throughout 2021 as a result of this plan. So let's take a look at this presentation. We want to know who the CEO is, and that is Todd Smith, President and Director. The COO is Mark Strobeck. General Counsel, Megan Timmons. And let's just look here. They transformed the company May 2020 by merging with Zyla Life Sciences. It says early Q3 prescription trends show growing demand versus pre-merger levels, supporting execution of new commercial strategy. $1 billion in synergies. Business was profitable on adjusted EBITDA basis in Q2 despite COVID-19 disruption. Product portfolio, Zyla Life Sciences has all this. And then we have Assertio that has Zipsor. It says they are positioned to grow through execution and cash management. Optimized newly integrated commercial sales force, launch new commercial strategy, neurology focused sales team, launch hub and SP network. So these were their 2020 milestones. There are financial synergies to be fully realized in 2021 this year. They launched new commercial strategy. They created a dedicated neurology sales force. They launched MSLs to support endocrine development in education. early Q3 positive trends, prepaid $10 million of senior secured debt, and they anticipate executing 1 to 2 business development transactions in the next 12 months. That is definitely a positive catalyst if they are able to do that, and that's probably why they are raising so much capital this month. So I am very bullish on this company. Look at them 1 month. So it gapped up in early February was when they announced the offering, and now it's just consolidating. So what I'm going to do is sell a cash secure put. And to be able to sell cash secure puts, all you need is a collateral. So let's take a look at the options chain. We're going to go to trade. I am using Robinhood. We're going to March 19 is our expiration date. And it says here, we can sell 1 cash secure puts. And when you're selling a cash secure puts, it means you're bullish on the stock. And all we need is $100 in collateral to collect $20. That's 20% profit in 1 month. And you can sell as many of this as you want, as long as you have the collateral. So there are 2 outcomes. If the stock price is below or is at $1, you would have to buy 100 shares at $1. That's where the collateral comes in. It only happens if you get a sign on expiration dates. Second scenario is if the stock price is above $1, your collateral will be released back to you. And either outcomes, you get to keep this premium, which is $20. So you can technically use this money to buy 20 shares of this stock. And that's why I like selling cash secure puts, because we actually get the money up front. So instead of investing into a stock and waiting for the price to go up, why not receive a premium while using the collateral? So I'm going to go ahead and review. Let's just take a look at the order summary. It says you are agreeing to buy 100 shares of ASRT of $1 per share on or before March 19. If you aren't asked to buy ASRT by then, you'll keep your collateral in the full $20 credit. So I'm actually going to sell 2 just because I am bullish on the stock. And the reason why premium is so high is because take a look at the implied volatility. It's over 200%. I'll just sell 2. So now my collateral is $200 instead of $100. And I would be getting $40 back. So I'm going to go ahead and swipe up to submit. And it did get filled, so we're going to take a look at that right now. There you go. I was able to collect $40 in a premium. I hope that was helpful. It's a very easy way to make some money. You get the money up front. And now what I can do is I can use this money to buy shares, or I can treat myself to a nice meal. If you found this video valuable, please don't forget to like, subscribe, and comment down below what you think of the stock. Also, do consider joining the Patreon page. We're looking for like-minded people to join our community. Thanks again.